Okay, good morning. It's just after 10 o'clock and I would like to get started. I do have a guest today, Heather Purcell. And I just want to do a little bit of introduction before I let Heather take over the presentation for the first part. My name's Hilda Gann and welcome to COVID-19 Tough Decisions for Business Owners. We are on episode 7 today, Financial Survival with Heather Purcell of Finally CPA. We created COVID-19 Tough Decisions for Business Owners as a webinar series to answer the needs of managers, business owners, and human resources professionals. Our goal is to really provide you with information, tips, and strategies to help you through this tough time and the decisions that you have to make. And the fact that the decisions keep evolving and changing and so many iterations, you're not sure which iteration it's on. And so this is what we hope to do. I am, as I said, Hilda Gann. I'm the founder and president of People Bright Consulting and the creator of a concept called Connect with Rev Up. My husband and I started our own company years ago called iTrans Consulting, and I am an award-winning work culture specialist. It was an engineering firm that grew from 2 to 125 people in 7 offices across Canada, and we became recognized as one of the best workplaces in Canada. And so what I did was take that knowledge of growing a company to 125 and creating a strong work culture to share my knowledge and expertise with people. The areas that I work primarily in are healthcare, engineering, IT, and human resources. These are some of the resources that you may find helpful and will be part of your the email that we send to you after. So I'm going to stop sharing now and I'm going to introduce Heather Purcell to you. I know she has a little bit of a presentation herself with her introduction, but Heather is the co-founder of Finally CPA, and she has an extensive background in CPA in the marketing sector. But I will let you to share more, Heather, and thank you very much for coming today and sharing your wisdom with our group.
No problem. Thank you for having us, Hilda. I have prepared a presentation, so I'm going to get it up and share that. And if you don't mind, I'm going to turn my camera off so that...
By sharing your presentation, you will be turning your...
Okay.
It's up to you. One thing I would like to do is if you have questions for us, please put them on the chat line. You can do that by chatting to everyone, or you can put it by sending it privately to Jenny. Jenny and Diane are part of our team for the webinar, so please start putting your questions on the chat line so we can answer them. We will have a 25-minute presentation followed by a 15 to 20-minute Q&A. Thank you, Heather. Take it away.
Thanks, Hilda. As Hilda mentioned, my background is in financial management of small to medium-sized businesses. In my career, before I started a business, I spent over 20 years in leadership positions at both privately and publicly owned companies, mostly in the marketing and advertising space. And this is where I got firsthand experience on the challenges that owners and operators face on a daily basis. My classical training is as a management accountant versus in tax or audit. My role has always been to provide the most timely and accurate visibility to operating performance for business owners and to provide leadership teams with insights in the financial data to support good decision making. My passion has always been and continues to be small business, and I have always believed that small businesses are underserved from a financial point of view. Last year, together with my business partner, Cecilia Long, we launched Finally CPA to provide small businesses a more robust financial solution at a price that we believe is accessible. Our solutions combine elements of part-time CFO, financial planning and analysis, and monthly accounting. And our goal is to provide growth-oriented small businesses, particularly in the marketing space, the benefits of an accounting team until they are big enough and established enough to get their own in-house accounting team. So what I'm going to share in our presentation is really how we've approached responding to COVID-19 with our clients. To clarify, most of our clients are businesses that have between 5 and 20 employees, but a lot of the information here would also be really relevant to smaller businesses than that and people that are operating as solopreneurs. I'm sure many of you are going to be in the same position right now. Unfortunately, as a result of COVID-19, so many businesses are now walking on a tightrope. Most businesses have seen the majority of their revenue disappear overnight with no visibility to when it's going to come back. And unfortunately, most businesses still have tremendous bills to pay. They still have rent for offices that are in many cases sitting empty, salaries for workers who in some cases have no work to do, inventory that maybe they just received for the spring and summer season and they have no way to sell it. And more than ever, being clear over your financial position is going to help you to prioritize and make the best decisions for your business as you navigate through these tough times ahead. For our clients, we've really been focusing on 2 primary pillars over the past 4 weeks to ensure the best possible outcome given the circumstances. So we've been focused originally on just good financial management and good rigor around that. And more recently, as the government programs have become more fleshed out and more available, we've been layering in what's available from a government perspective into our planning with clients. Before I go through the financial management, I just want to clarify that for all of the clients that we work with, financial planning and analysis and robust monthly reporting is has always been a big part of the services that we offer with our clients. And we do this so that owners we work with always have the best visibility to how their business is performing. We find, and particularly with small businesses, that too often business owners are evaluating their performance based on their bank account balance, but in most cases, it actually has not much to do with their actual business performance. So we've seen lots of really profitable businesses have chronically low cash balances because they haven't optimized their working capital. And conversely, we've also seen low profitability businesses have high cash balances. And this is particularly the case in businesses that are able to bill in advance and perform the services later. And what it creates is an illusion of more profit than is actually the case. And when that happens, businesses are likely to make bad decisions. So the first thing that we did with our clients when businesses started to close the middle of March was to quickly work to do some scenario planning and some forecasting around the next 30, 60, and 90 days. Because there was so much uncertainty, there wasn't a lot of point in going beyond that sort of 90-day window. And when we did this exercise, unfortunately, every cost item was evaluated, and we took the position that every one of those expenses that the business had was an expense that could be improved. Some of the things that we looked at, we obviously started with the biggest contributors of expense for the businesses that we work with, rent being one of those. And so in some cases, we encouraged our clients to approach landlords to look for deferral, or rent reductions. In terms of staff costs, we were looking at ways that maybe we could benefit from programs like work sharing at that time to provide a short-term impact while retaining key team members. Even things like cell phone plans, meals and entertainment. Another area that we see businesses spending a tremendous amount of money these days is licensing for software, team events, training. All those sort of maybe not discretionary items under normal course of business were evaluated for the purposes of COVID. And the overall goal was to see how much money we could eliminate from the discretionary expenses so that we could ensure that we could keep as many of our team members in place for those businesses. The goal was really to keep people employed. Once we had come up with sort of our best case scenario from a profit and loss point of view, we started to look at receivables, payables, and loans that the businesses had. Again, for the businesses that we work with, they all sell on credit. So that might not be the circumstance for everyone on the call today. But for the portfolio of clients we have, that is how it works. And so what we needed to do very quickly was to understand which of the clients that owed us money would not be able to make it through the crisis, and which bills we wouldn't ultimately get paid for. We also wanted to understand which clients were going to make it through, but are more likely to take substantially longer to pay. And then, you know, lucky for many of our clients, they did have clients who would likely to be unaffected from a credit point of view because of the crisis. So big financial institutions, insurance companies, etc. In terms of the people that the clients we work with that they owe, and this would be both like credit products and suppliers. If they hadn't already, we encourage them to start building a relationship with their banker. So, you know, for some businesses who are in the luxury position to own their business premises, there might have been an opportunity to delay their mortgage payments temporarily, just like we've seen on the personal side. For those businesses who already had an established line of credit, we've seen opportunities where people have been able to increase their line of credit with their financial institution, even if on a temporary basis. So some banks we're seeing are extending their line of credit by 10 or 15%, even on a 120-day window. This is a good opportunity for you to explore what other products might be available to you that you hadn't considered before. But there's a couple of things that we really want our clients and small businesses owners to keep in mind. And this is for businesses that already have established lines of credits with their financial institution. Those most likely came with debt covenants. And so it's really important in this environment to make sure that when you are extending your credit position with financial institutions, that you are still working within the covenants that you had agreed to. And if you're not, you probably want to work with your bank much sooner rather than later on it. And during this time, they're probably going to be more flexible. The other thing that we also work with our clients on is to really try to establish a line in the sand with respect to how much debt you're willing to incur to weather this storm. So for almost all of our clients, they need to personally guarantee that the loans that they have on their business. And so for that reason, I think it's really important that people decide, very early into this crisis, how much debt they're willing to expose themselves to, both from a corporate point of view and from a personal point of view. On the supplier side, so again, the businesses that we work with, not only do they sell on credit, they also buy on credit. And so from a supplier point of view, unfortunately, during times of crisis, most businesses aren't going to be able to meet all of their obligations in the time that they would like to. And we will see some prioritization of payments. And so what won't happen is that the oldest bills will get paid first. What is most likely to happen during these times is that businesses are going to prioritize those payments that are most important to the ultimate success of their business for the long term. And in areas where businesses can't make good on all of the bills that they have at this point in time, we are encouraging our clients, and we do this on their behalf as well, to reach out to those suppliers and work with them to establish a payment plan. And in our experience, we're finding that suppliers are really working with people in good faith to ensure that all businesses sort of survive through this. Once we got through those sort of three phases, the last thing that we did was to work on some cash flow forecasting. So for this, we didn't take a 90-day point of view because there were too many variables that still had a lot of uncertainty around them. So we really started to look at just a 12 to 16 window. And at the time that we started this, so we started all of this work the week of March 15th, the government really hadn't announced any programs with respect to wage subsidies and access to credit. So at that time, we had to work with the resources that the business had available to them at that time. What we really wanted to understand very quickly was what their runway was, how likely it was that they were going to run out of cash, and sort of what would be the domino effect if we had planned for our supplier or our clients to pay us and they didn't do that, you know, how is that going to be impacting our clients' ability to pay their bills? And that's pretty much what we did very quickly for all of our clients, probably in the first week, and what we continue to iterate on now as new information has become available to us, and with all of the government programs that are out there now, which we're going to talk about after this. We've really just been layering on that additional detail onto the plans that we already have, but because our plans are pretty robust, we're able to make decisions very, very quickly with our clients. Before I go on to talk about the government assistance programs that are available, I wondered, Hilda, if you wanted to maybe talk about what you saw I know you have a lot of small business clients as well, what you saw your clients doing from a financial management point of view, and if there was anything that you saw worked really well that would be worth sharing with people.
I'm unmuting myself. Thanks for sharing your wisdom. And I think your clients were in really good hands because you were very proactive about helping them. Because I think part of it is, as business owners, we almost think, okay, how are we going to make things happen? How are we going to make things happen? And there's this restless sleeping at night because you're not sure. And I think when you put it on paper, it really makes a difference. Or when you talk about it aloud and have a plan. And I found that resonated with me and my clients from a human resources perspective, because they said, well, how am I going to do this? What am I going to do with my staff? And I would talk to them from a workforce employee staff position, as well as the cash that would take to happen. And a couple of comments was that I myself have found speaking with clients is key, whether it's my HR side or my business side, and having that dialogue with some clients, as you say, figuring out who is likely to pay, who is likely not to pay. You know, I've had my clients talk to landlords, and I've had some landlords actually approach them proactively and say, hey, you know, we're going to forgive the next few months and let's work out something. So what a great opening, starting conversation for some of my clients to have when their landlords actually said, we're going to hold for a couple of months and see how you're doing. The other thing I wanted to share was people are buying, and that prudence that you share about, you know, making sure that you buy things. And what people are doing is they're buying essential goods. So toilet paper, for example, is really popular, but they're also buying treats, things that keep you going. You know, they may not be expensive, but they may be something that's a perk. I buy 3 chocolate bars a week for the family so that we can treat ourselves. You know, others it might be a bottle of wine. The other things are expendables and postponables, and those are the ones you likely as a business owner will not purchase at this time. But do budget a little bit for treats, because we're in stressful times and we do need to manage our stress, and so a little pampering goes a long way. You talked about debts and covenants when you go to banks, and I just want to make sure some people don't even, you know, have never borrowed from the bank. They borrow from their mortgages or you know, an RSP, but they self-sustain. So the term debit and covenants are important, because monthly you have to report to the bank why you can still carry your loan, because when they're concerned that you're not meeting those covenants, which are a set of metrics that they need to see from you on a monthly basis, they're really concerned, and then they could call in the loan. the beauty of the $4,000 loan, which Heather will talk about shortly, is that it won't have those covenants. It will just have that if you pay by December 22nd, you know, the loan's forgiven, but if you don't, then there's interest charges. So I thought that was an interesting thing. And I agree with that comment you made about cash flow and expenses. I think people need to have a combination of understanding what the money in the bank is, but also how much they're spending a month, so that they're not saying, oh, I got lots of money in the bank, let's buy this, and then find out that they're not making money. So thank you very much. And I see you've got government assistance now to share with the group.
Yes, I do. In terms of government programs available, again, our focus is going to be on the programs geared to support small businesses with employees, but almost every one of these employees is, I do have one slide about programs that are available for self-employed people as well. The programs that have been most helpful for our small business clients generally fall into 3 categories. So they're programs that are designed to help with employment costs. So that has really expanded in the last few weeks. Programs designed to keep cash in your business longer. Programs designed to provide access to capital. And this is especially for businesses who might not have otherwise qualified before the COVID crisis. So I am going to go through these programs pretty quickly, but after this session, Hilda's going to send out a 1-page summary that we've created that also has links to the government sites. I'd encourage you to discuss these programs with your financial partner or your in-house accounting team. Most of you probably would have done that already. And if you don't have that resource available to you, we're happy to help in the next week or so. The first program that we're going to talk about is the wage subsidy programs. And what's really great about these programs, and especially the Canada Emergency Wage Subsidy, is in many cases it's enabling employers to keep employees that they might otherwise have not been able to keep. And in some cases where employers had to let people go the middle of March or late March, we've seen lots of examples where employers are able to bring their team back now because of some of the wage subsidies that are available. So the first one that we're going to talk about and is by far the largest and most helpful program for those businesses that are eligible is the Canada Emergency Wage Subsidy. So I'm sure you guys have all heard about this program already, and over the weekend it was revised again to improve access to even more businesses. So as of now, the criteria to be eligible are a 15% decline in revenue for March and 30% for April and May. But the government revised the rules this weekend. So if you qualify now for one period, then you are automatically going to qualify for the second period. So if, for example, your sales were down in March by 15%, but they were not down by 30% in April, or they won't be down by 30% in April, you will still qualify for April. You will, however, have to be down by 30% to qualify again in May. The other thing that the government has done is change the reference period. So when the program was first announced, the reference period was year over year. So March over March, April over April, May over May. That has since been changed to either be year over year decline in sales or the average of the first 2 months this year. So the average of what your revenue was in January and February. And that's really helped high growth businesses. So a lot of businesses in the tech sector whose businesses are designed by nature to grow very quickly. Their revenue could be substantially down this year over the beginning of this year, and their cost structure right now is designed for what their sales were in January, February, but their sales aren't actually down over last year. So those businesses are now able to be included in the subsidy, and also businesses that didn't exist last year are now able to benefit from this subsidy. The one thing that you need to keep in mind is that if you choose the reference period of January, February this year for your eligibility, then you need to continue to use that reference period for the next qualifying periods. It can't be either or. So whichever period you choose, whether it's year over year or versus January or February this year, you need to continue to use that period for the duration of the program. And then the other thing that was changed over the weekend is the method of recognizing revenue. So now they're enabling businesses to use either the cash method of accounting or the accrual method of counting. So businesses who sell on credit generally recognize revenue based on the accrual method of accounting, but the government is allowing you for this purpose to use the cash method of accounting if that helps you qualify. So if you sell on credit and all of your customers or clients stop paying your bills, your revenue might be good from an accrual point of view, but because none of that cash is hitting the bank, it might be very easy to establish that you're down year over year or versus the first few months of this year if you're not getting paid for the work that you did. The maximum per employee is $847 per week. There's no business maximum, so very large businesses can qualify for this subsidy. You will apply for it through your My Business account. The portal is not open yet. We hear it should be open within the next 2 weeks. And then the other thing that's really important to note here, especially for large businesses, is the employer needs to make the salary payments to the employees now, but they're unlikely to be paid from the government for at least the next 4 weeks. So from a cash flow point of view, there's going to be a timing difference between when you pay your employees and when you receive the cash from the government. And for that reason, it's possible that maybe some businesses won't be able to afford that spread in days. Now, the good news is there are credit programs available to businesses that didn't exist before that might help cover that gap, and we'll talk about that at the end. So there are some other special rules for this program, which is on the government website. If any of it's not clear, please feel free to ask us. The other program that's available for wage subsidies is the temporary wage subsidy. So this is actually the program that was originally announced from the government. And this one does still exist. It doesn't provide nearly the benefit that the Canada Emergency Wage Subsidy does, but it does offer 10% wage subsidies for employers whose business is not down as much, or quite frankly, not down at all. There's no revenue criteria that you need to meet. The mechanic to claim this benefit is a little bit different. So you don't need to apply for it on a government website. What you will do is you'll withhold 10% of the income tax that you collected for your employees. You'll keep that and you'll pass the difference to the government. And you can do that for each employee until you've reached your maximum of $1,375 per employee. This one does have an employer cap. So the employer cap is $25,000. So it's really designed for up to 18 employees, this program. The next program, which you've probably heard a lot about, is the Canada Emergency Response Benefit, otherwise known as the CERB program. This one is really for workers who have lost their income as a result of COVID-19. And it's been really great for people who are self-employed, who would not ordinarily be eligible for EI because they don't make EI contributions, and for people who have had to stop working, maybe to care for children who are not at school or to self-quarantine. This program provides $500 a week in benefit for up to 16 weeks. There are some criteria to be eligible, including having no income in at least 14 days of the first 4-week period. For subsequent periods right now, everything that we read and understand, you can't have any income. And I know that that's a big problem for a lot of self-employed individuals who maybe still do have some income, or even employees whose hours have been dramatically reduced. And it sounds like the government is going to find a way to adapt the rules to include some amount of income and still allow this benefit. The next set of programs we're going to review are the programs that were designed to keep cash in your business longer and access to credit. So the programs designed to keep cash in your business longer are really around tax deferrals and EHT and WSIP or WSIB payments, income tax payments and income tax installments payments that would have been due between March 18th and August 31 can now be deferred until September 1st, 2020. And also the tax filing deadline has been extended to June 1st. That's both for corporations and for individuals. In the case of individuals, if you do owe income tax relating to last year, those payments are also deferred until September 1st. And for self-employed individuals, there's no delay in when the return is due. It's still due June 15th, but payments are also deferred until September 1st. And that's really to help businesses with their cash flow to meet their short-term cash flow obligations. On the HST side, this one was announced a little bit after the income tax side, but HST or GST remittances that would normally be due between March 18th and June 30th are now due on June 30th. And that's for all types of filers, whether you're a quarterly filer, a monthly filer, or an annual filer. The next two programs are the EHT program and the WSIB program. These ones are backed by the province. So in both the EHT program and in the WSIB program, the payments are deferred to August 31 without penalty. Oh, and I didn't say this about the HST. The payments are deferred, but the return is not. So if you had a return that was due between now and June 30th, you still need to file the return. You're just not required to pay what you owe until June 30th. And that's the same with WSIB as well. You still need to continue to file your returns. You just don't need to make the payments till August 31st. And for EHT, for larger employers who have payroll between 490,000 and 1 million, the exemption has been increased this year and this year only from 490,000 in total payroll to $1 million. So that will provide about another $10,000 in benefit for those employers. And then the final thing that I'm going to talk about is improved access to credit. So by far the most popular program amongst our clients are the funds that are made available through the Canada Emergency Business Account. That's the CEBA program. The goal of this program is to provide small businesses access to credit for immediate operating costs. So things like payroll, rent, utilities, debt payments, etc. This one is 100% funded by the Government of Canada. It's extremely easy to access, does not require any personal guarantees. You do it through your bank's online banking system. However, there is one criteria that you need to have to qualify, and it is you must have had T4 payroll income in your business last year between $50,000 and $1 million. So you as the business owner either needed to be on payroll or you needed to have an employee payroll of at least $50,000 last year to qualify. And this is the program that Hilda talked about, where the banks are providing up to $40,000 in financing, interest-free until December 31, 2022. And for businesses who are able to repay in full by the end of that time, the government is going to forgive 25% of the amount, or up to $10,000. And in the event where you can't repay it in full by the end of December 2022, they will term that loan out. So if, for example, you still owed $30,000 by the end of 2022, they're going to convert that to a 3-year loan at 5%, which is still a pretty attractive interest rate, especially if you look at the whole 5-year period that you had the funds available to you. The other product that is available is made available through the Business Credit Availability Program. It's really for loans between $300,000 and $6 million. you know, it's not a product that's really that we know much about, because our client group doesn't meet the criteria for those programs. But if anyone is on the call that does, I encourage you to talk to your bankers about that. You do access that program as well through your financial institution, and it's backed by the BDC and the EDC. I think they'll guarantee 80% of it. In terms of the short term, I just want to recap. You know, we believe that it's really, really important to get clarity over your numbers, both in good times and in bad times. And in this case, both, you would really want to understand your sort of profit and loss forecast as well as your cash forecast. It's really important to understand the impact of the available subsidies and the tax deferral programs, because in some, you know, for some really lucky businesses, these subsidies and these deferral programs are going to allow them to make pretty different moves than they would be able to make without those programs. And credit has been made available for the majority of small businesses. So if you haven't already, I would encourage you to look into that. In terms of the long term, and for long term, I don't mean, you know, a year, 2 years away. I actually mean in the next 90 days. I think we all need to anticipate permanent changes to our business as a result of COVID-19. There are going to be recessionary times ahead. And we're encouraging the businesses that we work with to maybe reset their expectations around what good looks like. So for the businesses who are used to making 10 or 20% every year in their business, maybe a good outlook for this year could be, you know, a break-even proposition at best, or maybe even a small loss. And then the other thing that we've seen a lot of in the last 2 or 3 weeks that has been really exciting for us is how quickly small businesses have moved to sort of reinvent themselves and find new revenue opportunities. And we really look forward to see what people come up with in that regard. So that's it. That's all that I have. Hilda, I'm going to turn it back over to you. And I don't know how it goes from here.
Well, I'm going to, great. So we're going to open it up for questions. I know there are a couple of questions on the chat. Jenny, can you read them out for us?
Yeah, sure. So for Garima, she asked, for 75% CWS, if I qualify for March 15th drop, March 15th drop, but then do not see 30% drop in April, would I get CWS for March and April, but not May?
Yes, that's our understanding. If you qualify for any one period, then you will automatically qualify for the next period now. So that was the big change that was announced over the weekend. And I really think that that is because the wage subsidy enabled a lot of employers to bring people back to work, but I don't think anyone wants people to bring them back to work today and send them home again in 2 weeks. Yes, I guess is the answer. If you qualify for period 1, you do qualify for period 2, but your sales will need to be down by 30% to qualify for period 3.
If you haven't put yourself back on the video so people can see us.
Oh, sorry about that.
I think we should.
Yeah. So another question Sarah had, which I think Cecilia, a partner of finally CPA already answered, but the question was just that, is the $25K in payroll for temp wage subsidy?
Sorry, what's the question? The 20K?
Yeah, so for temporary wage subsidy, is that $25K in payroll?
Yeah, so it's a maximum. So it's $1,375 per employee that's on payroll to a business maximum of $25,000. So any one business can't get more than $25,000 in benefit from that program.
It's the amount paid to you, not your salary wages. because the government's going to give you up to $1,000 and change per person, but any company can only get up to $25,000 given back to them. So that's different. It's the amount given back to you for the wage subsidy. It's not the wages, it's the actual amount.
And basically you collect that from your employer or your employee income tax payment. So when you do your payroll, you basically deduct income tax, Canada Pension, EI from their pay, and you remit that to the government the following month. So you take those 10% subsidies from the income tax that you collected from your employees, and you remit the difference to the government. And you can continue to do that until you've taken up to $1,375 per employee.
Yeah. And that may take 4 pay period or 4 remittance or 3 remittance periods, but once it reaches that, it's stopped.
Okay. And so for that 10% wage subsidy, you don't need to have like a certain payroll amount, say, $50,000 in payroll to your employees. Let's say if you only have 2 employees or 3 employees, you could take advantage of that 10% and then max it out at $1,375 an employee.
Yes.
Okay. Okay, I did have one other question as well. For the work sharing program, I have a client who has seasonal employees. So he typically has summer students, so high school students or university students. Can they use the work sharing program? Because I know part of work sharing is your employees have to be eligible for EI. So if they're seasonal employees, would that work sharing program work for them?
So that's a really good question. Hilda, do you know the answer to that?
I think the whole part-time temporary has not been articulated to us to interpret well. So I think that's a question one has to ask directly to them, because I don't know logically how they would interpret it.
To be honest, in our client group, we did a lot of work around investigating the work sharing program on their behalf before all of the other subsidies were announced. And it was too complicated to form work sharing units and get the employee to buy in and then get Service Canada to buy in to actually be effective. So none of our clients actually moved forward with the work sharing program. And I think they've changed it a little bit now to make it a little bit easier for everyone to apply. But to be honest, I don't know anyone that's participated in it. I don't know if anyone else on the phone is in the same way.
I had one person apply before the rules got relaxed. The rules now, I think it's a 10 or 15 day waiting period instead of 30. And it is, instead of a recovery plan that is pages long, they only need 3 sentences, which is amazing. So this company was going to apply for it, and I wish them luck. And in the previous recession, I had one company, a large engineering firm, that did it successfully. And the staff bought into it. And I remember one of the staff person saying, this is a win-win situation. And because at least I have a job, at least I have income coming for almost the equivalent of 5 days. And when you think of what I would have paid in taxes, I'm a little bit short, but I'm working, I get 2 days off a week, etc. So it depends on particular work, like companies, and how it's being used.
Yeah, I know. I didn't know if you knew about the seasonal. I was trying to avoid calling that toll-free number because it's really busy. Yeah.
I think there's a lot of questions about students, who don't meet the EI criteria, and do they apply for CERB? So I think every situation will be different, but some students may meet the EI criteria just by the virtue of the fact that they're staying home due to COVID. And on quarantine or whatever those rules and regulations are. And if not, a CERB. The difficulty is if you don't qualify and you did apply, you will have to pay it back. And it is considered income. So it will be taxable later on. Yeah. So people need to save a little bit extra for the tax. I think we have time for maybe, it's 10:45. We do have time for one more question, and I do want to wrap up with a few things that I want to share about upcoming sessions. So do we have one more question? I'm going to go to my share screen too right now.
Yeah, we do.
Okay, what are the questions?
Sure. So from Margaret, she's just curious about the predicted 4-week delay between paying employees and receiving the wage subsidy. Is that 4 weeks a prediction?
It is a prediction. So it's what the government has announced. They basically said that the portal should be open within the next 2 weeks and that the payments should file or follow 2 weeks thereafter, but it's fiction at this point. It's not fact. So the portal is not even open yet, but I think anyone who applied for the CERB found that the money arrived very, very quickly, and it seems like the government's doing whatever they can to get to money moving really quickly. And it seems like when people are completing these applications, the government has been requesting very few details, and I think they're going to worry about it later.
Yeah, there's a trust element right now, and they will worry about it later. And I know, talking to some of my clients and colleagues, they applied and 2 days later they saw money in the bank, and they even saw a week ahead of money in the bank. So I think the government is really trying to be supportive and helpful.
That's same on that $40,000 loan. We do have clients who applied on Friday and have their money already.
Wow.
Friday, Thursday.
Yeah, I was told by my bank that my thing was submitted, which I did on Monday, and then it was going to be 5 days to get back to me by 5 days, and then money will be in the bank shortly thereafter. So that's not bad. I figured 10 days. I'm showing here on the screen a couple of links, which will be included in your email that we send you. Our upcoming sessions are this Friday. We're doing an open forum. So this is an opportunity for people who have been wanting to have a more detailed, lengthy dialogue. We're just going to open it up for the 45 minutes for any questions that you have. On Wednesday at 10 o'clock, we're going to have Business Survival 2.0. So I'm going to take a deeper dive than I did in week 2 and really talk about business survival and some of the strategies, and opening it up to questions as well on Friday, because on Friday the 23rd, I will do the business survival. We'll take a couple of case studies and we'll have open forum questions. The 28th, it'll be effective people management strategies followed with Friday for case studies and an open forum. My expertise really helps me understand what business owners are going through, what managers are going through, what HR professionals are going through because of my years of experience. And I really, really can be helpful. So I do remind you that I do have a free 30-minute consultation if you're interested. And what I've also done is I've made an HR on-call services available to clients at a reduced rate. Normally it's $600 for a 2-hour consultation and $1,200, but I'm reducing that by 50% or more. And the 2-hour consultation isn't just a one-time. You can take as many calls as you need, up to 2 hours. So it can be a 15-minute call, a 30-minute call, or what. So I really do encourage you. I'm here to help. I'm here to provide you with guests and my speaking knowledge and wisdom to help you get through and navigate these very difficult times. I'd like to really thank Heather for coming on today and sharing her wisdom. And I hope that you have a safe and productive week. And if there are any more questions, people can stay on, because we'll stay on for a few more minutes, but I really want to thank people for their time and their questions today. Are there any more questions, Jenny, from the chat line?
Actually, yes, sorry, I was muted.
Okay.
Garima was asking, how does the 10% and 75% subsidies work together?
So they don't work together. It's one or the other. So if your business does not qualify for the Canada Emergency, the 75% subsidy, then you'll want to apply for the 10%. If your business does qualify for the 75% subsidy, then that's the one that you want. Some businesses already applied for the temporary wage subsidy before the 75% one was really flushed out and is even available. In those instances, you just have to reduce the payments that you received under the temporary wage subsidy when you apply for the amount that you're going to benefit from in your first period. There's no double dipping, but it's not a problem that maybe you already received one of those benefits.
And I would concur with that. My bookkeeper, we submitted our payroll taxes and did the 10%, knowing that we're going to do the 75. And she just reminded me that when we do the 75, we just make sure we deduct the 10%. So it's not, as you say, double dipping.
Thank you.
Cool. Any other questions? Well, I thank you for your time today, and have a safe week.
Thanks, everyone.
And thanks a lot again, Heather, for joining us.
See you.
Bye, everybody.